level of risk aversion or caution, if you prefer, is most like what other point in time since 1971?
Well, it's not as much as pre-Lehman, and PIMCO did very well pre-Lehman in terms of anticipating the crisis.
And post-Lehman.
Yeah, that's how we went from $1 to $2 trillion. We got it right. We weren't part of the big short, but we were part of the big void, so to speak, in terms of subprimes. So that was the most crisis-laden environment, which the Minsky moment was upon us, and Paul McCulley at PIMCO guided us very well in that direction. But now I think it's second, simply because of these secular forces that are coming together.
You feel the second most risk averse today than you have over the course.
Yeah, if only because financial markets are telling you that there's not much reward. It's obvious in the bond market with negative yields that I've talked about, but it's not so obvious in risk markets and growth-oriented markets, certainly with some of the high-flying stocks, but they're all connected, and so just an acceptance of that would suggest that the return is going to be much lower and the risk much higher.
To earn that return.
Yeah, it's not an attractive situation. Instead of buying low and selling high, you're buying high and crossing your fingers.